Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden in plain sight within corporate filings. Today we're diving into American Rebel Holdings Inc. And let me tell you, their latest report is a bit like a financial puzzle with some interesting pieces. So what's the big story here? American Rebel Holdings, a company that seems to be revamping its financial structure. Think of it like shuffling deck chairs on a ship, but with significant cash and debt involved. They've essentially reworked a deal with a lender called Streeterville Capital, and this has reshaped their financial obligations quite a bit. Let's break down that Streeterville Capital note. Back in June, they took out a loan, about $547 million, but with some upfront costs. Now in September, they've gone back to the lender to make some big changes. They entered into what's called a global amendment. This is basically a fancy way of saying they changed the rules of the loan agreement. The key thing here is that they got permission to pull $2 million from a special holding account. Remember that money sitting in a bank account owned by their subsidiary, RH Sub? Well, $2 million of that was specifically earmarked for paying off a Bank of America loan. But just like that, the Bank of America loan is history. It seems like they used that $2 million to settle up, and the remaining bit, about $139,000, went back to the company. But here's the catch. To get that $2 million released, American Rebel had to pay Streeterville a cool $1 million. This fee was added back to the original loan, so what was initially $5.47 million plus some other adjustments now brings their balance due to over $6.5 million. It's like paying a hefty fee to rearrange your debt. Then there's the exchange agreement. This is where things get a little more intricate. They split a part of that original note into a new loan, a partitioned note, for $1.3 million. This partition note was then exchanged for two new things. First, a brand new loan called an exchange note, also for $1.3 million. But this one is set to mature in 7 years and carries a pretty hefty interest rate of 12% per year. And second, a warrant to buy 25,000 shares of their Series D convertible for stock at $7.50 per share. Now, this exchange note has some very interesting conversion features. Streeterville can choose to convert the outstanding balance into common stock at a price of 80 cents per share. And the interesting part is this conversion is cashless, meaning they don't have to pay extra cash for the shares. They just adjust the loan balance. They can also convert into preferred stock at $7.15 a share. This conversion, however, requires cash or a reduction in the loan balance. It adds flexibility, but also some complex calculations. There's also a trigger event. If the company's stock price drops significantly, specifically if its daily average trading price known as the VBOP falls to 66% or less of that 80-cent conversion price, Streeterville can demand the full loan be paid back in cash over 3 months. This is a strong lever for the lender to ensure they get their money back if the company's performance falters. The agreement also includes provisions for what they call trigger events, both major and minor. If these events happen, Streeterville can actually increase the money owed on the note. For major events, the debt goes up by 10% each time, and for minor events, it's a 5% increase. They can do this a few times, but there's an overall cap of 30% on these increases. This is essentially a penalty mechanism for not meeting certain conditions. And if these trigger events aren't fixed within 5 trading days of the lender asking, they can turn into an event of default. This is where things get serious. If a default happens, Streeterville can demand the entire remaining loan amount immediately, and the interest rate can jump up to 18% per year. For some specific events, like those related to bankruptcy, the entire loan becomes due instantly. It's also worth noting that in the middle of all this, a firm called Carter, Terry & Company Inc. received a $160,000 fee related to the $2 million that was released. This highlights the significant advisory and transaction costs involved in these kinds of financial rearrangements. Looking at the company's structure, they've also pledged their subsidiaries, including Champion Safe Company Inc. as collateral. This means if American Rebel fails to meet its obligations, Streeterville could potentially take control of these subsidiaries. Now, let's talk about what this means for American Rebel Holdings. They've essentially refinanced a portion of their debt and gained access to some funds, but at a considerable cost. That $1 million fee to release the Bank of America loan money is a significant charge. The new exchange note, with its conversion features and stringent trigger clauses, gives Streeterville considerable control and upside if the company performs well, but also protections if it doesn't. The company seems to be in a phase of trying to manage its debt and potentially fund new initiatives. But this particular deal suggests they are in a position where they need significant capital and are willing to accept stringent terms to get it. The ability of Streeterville to convert debt into equity at a relatively low price point, especially if the stock underperforms, is a key factor to watch. It hints that the current market valuation might not be reflecting the company's full potential or its underlying risks. The reliance on these types of debt for equity swaps can dilute existing shareholders, and the penalties for not meeting certain financial or operational benchmarks are quite severe. It's a high-stakes game they are playing, trying to grow while managing a complex and potentially costly debt structure. Overall, American Rebel Holdings appears to be actively restructuring its financial obligations to navigate its current situation. The immediate goal seems to be settling past debts and securing new capital, but the terms of the new financing, particularly the exchange note with Streeterville Capital, indicate a challenging path ahead. The success of these arrangements will hinge on the company's ability to execute its business plan and improve its financial standing. Otherwise, the lender holds significant power to influence the company's future. The move to satisfy the Bank of America loan is a positive step in resolving past issues, but the new debt obligations and their associated risks are substantial. Alright, that's our breakdown of American Rebel Holdings' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.